Good morning, good morning, good morning. We finally made it. It looks like we made it. It's finally Friday. It's Friday the 17th of October all day. Before I go any further, a big happy birthday shout out to mine and Michael's dear friend, Martin Tweddle, building Hinkley Point, making nuclear great again, etc., etc. You better be listening to this or else I'm going to throw my toys out the pram. The bastard. Before we crack on, you know the score, all recorded live, so apologies if we swear and say shit, fuck, or cunt. It's a preview, it's a review of yesterday, it's a preview of today. Hopefully we add some value to your trading day. Hopefully you put a smile on your face. But before we do, I'll get the legals out of the way. Nothing discussed on this podcast is trading or investment advice. As we say countless times, if you are using a podcast to make trading decisions without doing your own research, give your head a wobble. Don't come crying to myself, Ryan Paisley, or indeed Mr. Michael Brown. Speaking of the devil, Mr. Michael Brown, how are you?
Well, very good morning to you, Ryan. Good morning, everyone. Very happy Friday. Certainly not a happy Friday for the market. Well, we've made it to the end of the week. It's been a long week, so we may as well celebrate something. We're alive.
Yeah. Is that where the bar is now? If I wake up, it's a good morning.
Well, actually, it might not be, given what we've woken up to this morning. There we go. Oh, dearie me.
So the wheels are falling off, mate, but it's all right. Rachel Reeves is up the helm. She's steering the good ship.
You know what? I reckon Rachel Reeves is probably one of the happiest people in the world this morning because the 10-year gilt is down 5 basis points. It's lowest yield since July. So this has done her a right old favour.
And I was about to say to you, she's sitting there, big smile on her face, big smile on her mooey, and she's probably thinking this is all down to her.
No. She won't know. She doesn't have a Bloomberg, remember?
Of course.
She's got to wait for it to be in the weekend FT. That's how she finds out.
Hey.
Thing is, I'm semi-joking, but I also think that's actually what they're doing.
Well, what is it? How many? You did do a Freedom of Information Act.
I did, yeah.
That's the kind of level of nerd you are. How many do they have at the Treasury?
11 in the Treasury.
The whole of the Treasury.
They employ about 2,500 people. So let's hope nothing goes wrong and they all need to use one at once. You know, the 12th man who's got to use his Bloomberg, he's fucked.
Exactly that. Well, what happened yesterday, my friend?
Well, do you know what? It was a bit of an odd day because up until sort of late afternoon here in London, kind of 4 or 5 o'clock, nothing really happened. Then it seemed like all hell broke loose, and markets ever since have been striking a very, very risk-averse note. Looking at S&P futures, we're off by about 150 points compared to where we were trading sort of yesterday afternoon. Treasuries rallying strongly across the curve. The 2-year Treasury down by about 10 basis points. The 10-year yield down by about 8 basis points since that time. And in the foreign exchange complex, what we saw yesterday was the dollar rolling over, but the dollar is actually catching a little bit of a bid this morning. Nevertheless, the major demand in the FX space coming through in terms of the havens, with the yen trading back under 150 this morning and the Swissy trading below 79 against the dollar. And of course, continued demand for precious metals as well. Gold trading to fresh record highs overnight at $4,375 an ounce. Why have we had this big sort of souring in terms of sentiment over the last 18 hours or so? Well, it seems, from what I can gather at least, and the conventional wisdom, seems to point to this stemming from some issues that have begun to crop up with US regional banks. Now, I am loath to really get into this one.
I think I'm with you on this one. It feels like, yes, there has been a little bit of some regional banks shit the bed. Should we be inferring that this is then rolled over to Asia? You know, we saw the Chinese tech names specifically down 3%, like the tech index or the tech sectors, in China, down 3%. I would prefer to say this is a coincidence because it is a very much a tiny bank in like air quotes. I really don't think this is anything to do with that. I think maybe a bit of froth off the top, a bit of kind of selling. We've seen at the start of the week, we saw news coming in that retail investors are pulling their money out of China. The Chinese stocks, obviously, if we remember, Chinese stocks in the retail side were getting so incredibly frothy. We had individual companies telling investors, please do not buy our stock.
Yeah, that's very true.
So
I would sort of... Go on.
Go. I was going
to say, I would sort of frame it as just the latest block in this wall of worry that the market's sort of struggling to climb. You think about obviously the tariff risks that we've got, which are probably inhibiting conviction to buy the dip. Some folk are still worried about the government shutdown, which I think is misplaced. The market's up. I put out in a tweet yesterday before all this kicked off. The S&P's up 30% from the April lows, for goodness sake, and we've basically done that in a straight line. So it's not actually that concerning, I would say.
Yeah, well, exactly that. Exactly that. I'm hesitant to just say buy the dip because that normally works. But yeah, it does feel like, it's a Friday as well. Let's not forget. Let's take some money off the table.
Well, yeah, quite, especially given what happened last Friday. I think that's
And,
still
well,
very,
and
very fresh
exactly
in the
that.
mind.
And to be honest, I'd put more weight behind that than, it's, Chinese tech tech sector's off 3% because of a regional bank. I'd be more likely to say it's because they're taking money off the table because what could happen this weekend with Trump and Xi?
Yeah, well, God only knows. Now that we have dispelled that, I'm still going to go
Yes.
through the figures because I calculated them all this morning, and it actually backs up our argument. So one of there's two of these banks that were gathering a load of headlines yesterday. One is Western Alliance. The second is Zion's Bancorp. Anyone ever heard of those fucking
No,
banks? No, of
no,
course you haven't.
exactly. Made up bank.
Both of those have taken write-offs on some loans. Both of those are tied to fraud. So it doesn't feel like this is a sort of systemic thing. It's a couple of people have been fraudulent with some, well, as you say, air quote, banks in the US. And those banks have realized on the same day that they're going to need to take a provision for that. For Zion's in particular, we are talking here about a write-off of $50 million,
Oh,
which
but what?
to
That's
your
down the
eye,
back of the sofa.
well, I was going to say, to your eye, I mean, I would quite like $50 million. If anyone wants to send that my way, that wouldn't go amiss.
Yeah.
But this is a bank, a tiny bank, but they still have 90 billion with a B in assets. And you're worried about $50 million.
This is what I mean. I mean,
Fucking
look,
break.
no trading advice, but this sounds, regional banks got absolutely tanked towards the end of the session last night. That does feel like a buy the dip if it's all on the back of that.
Yeah. And of course, the other thing, and I'm sure Zach is tutting away as we venture into his territory now. But the other thing is that, a lot of people have been talking about conditions in money markets tightening. And yeah, they are, with that's undeniable. But we heard from Powell earlier in the week, the Fed are aware of that. The Fed are already looking at slowing or stopping, I should say, the balance sheet runoff. And they also have so much firepower if they need to step in and sort of sort those plumbing issues out if they crop up. That, again, is that really worth this sort of a move? I
No.
struggle to see the case.
Speaking of our dear friend Zach, I saw him getting very, very geeky talking about TSMC's earnings call yesterday.
Oh, God.
Oh God, I nearly mugged him off, but it was in public. I didn't really want to do that.
Good morning to Zach. If you
Morning, Zach. Morning.
Anyway, now we've set the world to right in terms of US regional banks, we can move on to other matters because there were a few other headlines yesterday. On the trade front, China's foreign ministry, they have called for, and I quote here, effective communication between China and the US to resolve their differences, and says that decoupling with the US is not a rational choice, just a further cooling of the rhetoric between the two countries. Of course, we are now a week on from that 100% tariff threat that, well, as things stand, is still due to go into place on the 1st of November. But of course, we're very much working on the assumption that that is just a negotiating tool.
Yeah.
Sticking with tariffs, the US, the Trump administration, apparently they are nearing the point where they can announce tariff relief for the US auto industry. Obviously, this is something that US automakers have been lobbying very, very hard for indeed. And an announcement on that front could come as soon as today. This is according to Bloomberg citing sources.
Speaking of Trump Trump coming in and kind of supporting an industry, he did also come in yesterday and say he's going to reduce the beef prices. Quite how he's going to do that, if he's going to magic some cows out of his ass, I'm not sure. But that's a sight for sore eyes, I bet. Sorry for putting that mental image whilst you're having your breakfast. But yeah, whatever he's going to do, I suppose you've got to ask if he can get a move on.
God, that's just utterly ridiculous.
Oh, stop it. Oh, that's what they pay us the big bucks for, let's be honest.
Well, I don't know what they're paying you, but I can tell you what they're paying me. It's a very small number.
Well, you're getting paid more than me because I buy you pints.
That is very true. That is very true. Anyway, sticking with the trade front, we also heard from a White House official yesterday that sort of trade geopolitical developments, apparently the US and India have been holding productive discussions, which has led to India already cutting imports of Russian oil by 50%. Of course, this was something Trump was very, very focused on earlier in the year and sort of comes back to as a bit of a pet subject every now and again. Moving on from that, but sticking with US politics, Senate Majority Leader Thune, apparently he has offered privately Democrat leaders a vote on the Affordable Health Care Act as a way to end the shutdown. This is just, political game
Yeah.
playing. Ultimately, it was one of those offers that is made knowing full well it will be rejected, but you can then go out in the media saying, oh, look, it's them that is, saying, no, not me. I'm trying to negotiate in good faith. Frankly, there seems to be no end in sight to the government shutdown. And I believe, and I'm sure someone can correct me if I'm wrong, that the Senate is now out of town for a week anyway. So it may be some time before that one is resolved. Remaining with politics, but on this side of the pond, in France, French Prime
On
Minister
France,
Lecornu.
on France.
There's your A-level coming in handy, isn't it?
La bibliothèque.
French Prime Minister Lecornu, he won not just one, but two confidence votes in the French Parliament yesterday. This was very much in line with expectations.
Can I just say this sums up the French politics where they actually have two in a day?
Well, yeah, because basically what it was two parties wanted to table a motion of no confidence, but Party A didn't want to vote for Party B's motion, and Party B didn't want to vote for Party A. A
What a
bit
shower.
ridiculous. Ultimately, the nub of the matter is that he has survived. It does look like the sort of imminent political crisis in France has been averted for the time being. As a result of that, we saw the BTP, the OAT Bund spread coming into about 75 basis points yesterday, which is its tightest level since the summer. So the market clearly pulling back some political risk on that front. Moving on from that, we heard from a number of Fed speakers yesterday, very much in line with recent remarks, really. Chris Waller, Thomas Barkin and Neil Kashkari, all noting that the labour market continues to slow, and none of them hinting at anything other than a 25 basis point cut at the end of the month and another one to come in December. We also heard from Governor Steve Moran, who is a complete and utter moron.
Whoa. He's a follower of PIQ. I won't have a bad word said against him.
He was again, just his usual uber dovish rhetoric, talking about how the Fed should cut by at least 50 basis points in October. But he does seem to have admitted defeat on that front because he said, I expect it will be only a 25 basis point move. So we will, obviously, he's going to dissent, but it's not going to make any difference in the grand scheme of things. Moving away from that, just a few other bits and bobs to mention this morning. Firstly, in terms of precious metals, obviously there's been a lot of talk about silver recently. This is the first exchange I've seen to do it. India's commodities exchange, they've put an additional 2% margin on their silver futures contracts. That came into effect today. I do wonder whether any other exchanges are likely to follow suit.
I think it'll be, knowing how CME work, I think we'll see announcements over the weekend or potentially later today for people to put margin in for Monday.
Yeah, I would not be at all surprised on that front either. And of course, the other thing to bear in mind is that certainly if a decent chunk of this move is basically being driven by speculation, which it could well be, if you up the margins, that can tamp down on some of the speculation. So we do tend to, just anecdotally speaking, these sort of margin hikes, well, put it this way, they don't come at the beginning of these explosive moves.
No,
I'm not going to sit here and call a top, but it comes nearer the end than it does the beginning. Moving on from that, a bit of corporate news. UBS, they've been in the headlines quite a lot this week. They are ramping up scrutiny of clients in Asia. They had a scandal recently in Singapore involving some money laundering issues. They have brought in Deloitte and KPMG to help screen client documentation. So what could possibly go wrong with that one? Moving into the tech sector, CoreWeave, they have unveiled AI object storage, which, according to a statement from the firm, is going to redefine how AI workloads access and scale data. Good for them. Apple, meanwhile, Bloomberg citing sources familiar, noting that Apple are going to unveil the first touchscreen MacBook Pros in either, the sources say in either early 2026 or late 2026. I don't know why they didn't just say next year, but there we are. These computers are apparently going to have a thinner frame and M6 chips. And also, just speaking of chips, Micron, the chip maker, they have stopped selling server chips to data centers in China. Apparently, this data center business has been impacted by a regulatory ban. So that's obviously something to keep an eye on, because China, not only talking about sort of tariffs and rare earths and all the rest of it, one of the other sort of avenues that they are going down is targeting US firms. And Micron seemed to be the latest on that front after Qualcomm and Nvidia, who were obviously targeted with probes last week. And last but by no means least from me this morning, of course, we mentioned Chancellor Rachel Reeves earlier on and how she's going to be very content with the decline in gilt yields. We did hear from the Chancellor yesterday. She was speaking in Washington, D.C. She was talking about the budget, of course, saying that they are not going to be introducing a wealth tax. So that's good news. But before you celebrate too much, she said that those with the broadest shoulders should pay their share of tax. So we're not going to tax wealth explicitly, but anyone who is quote unquote wealthy in the government side,
Will
you're going to
get
be
taxed.
paying more from the 26th of November.
So try and unpick that one.
Yeah, I'd rather not.
Yeah, exactly that. Well, thank you for that, Michael. So just before we head back to you, I'll read out some of the news roundups from Zach's very awesome, always awesome overnight news roundup. As usual, do follow the Substack, do follow Zach, etc., etc. So starting off in macro space, as we touched on this morning at the start of the show, regional bank rout echoes 2023 crisis. Does it? The S&P regional bank select industry.
Zach.
No, that's not him. That's not him. I can't put that headline on Zach. That's what it's come up with when I ran it through the optimizer. The S&P regional bank select industry index plunged 6.3% on Thursday. Its worst drop since April's tariff-induced sell-off, and an echo of the stomach-churning declines that rocked the sector during the 2023 crisis. Banks tapped the Federal Reserve short-term lending facility for more than $15 billion over the past 2 days, signaling liquidity pressures in the repo market that could drive Fed to stop shrinking its balance sheet. I really don't believe any of that, but there we go. I'm just reading it out. Bank of America's Cabanas said there are, quote, clear signs the Fed is likely overdrain liquidity from the system. QT will end by the end of the year, but it could end even earlier. This is a loss of control of money markets. So Bank of America really starts, proper shit in the bed there.
Is there like a hyperbole ETF that we can buy into? Because that thing's going through the roof.
Cabana's limit up, let's be honest. White House delivers auto industry tariff win, as adding more color to what Michael touched on earlier. The White House is poised to ease tariffs on the auto industry in a major win for car makers that have aggressively lobbied against record level import duties. The Commerce Department is slated to announce a 5-year extension for an arrangement allowing automakers to reduce tariff payments on imported car parts, previously scheduled to sunset after 2 years. However, a group representing major automakers warned that late Thursday that a chip supply disruption from Nexperia could quickly disrupt US auto production. That's from Bloomberg and Reuters. Fed officials, they're downplaying tariff impact. Fed's Mirren, my favorite man, said the downside of Trump administration tariffs have been nowhere near what many predicted, repeating his view that tariff costs won't be borne by US consumers. Fed's Kashkari, always wrong, never right, said he doesn't think there's a big chance that the labor market will weaken sharply or inflation will surge. God help us. Though he worries about the risk inflation could stay persistently above 3%. The dollar, that's set for its worst week since June on Fed bets and bank woes. Also, Trump said his administration struck an agreement to bring down beef prices for consumers, as we said earlier on. No idea how he's going to do that. Move along, please. Utterly believable, etc., etc. Japan's political drama continues. Japan's lower house scheduling committee agreed to hold a parliamentary vote to select the next prime minister on October 21st. The likelihood of the ruling LDP forming a new coalition with opposition party Ishin is 50-50. The smaller party leader said Friday, that's according to them. Bank of Japan's deputy governor Yoshida said the bank will continue raising rates if economic and price developments move in line with forecasts. Japanese stocks drew massive cross-border investments last week, with foreigners pumping a net $12.59 billion worth of buys into the market, driven by expectations of fiscal dove Takashi would become prime minister. As we mentioned before already, UK Chancellor Reeves has conceded her planned budget is unlikely to be popular with the public. No shit, Sherlock. But she's hoping to reset the narrative in gilt markets and bring down borrowing costs. Sources note Reeves is frustrated at the recent premium on UK gilt yields. Well, it's your fault, you dopey bitch, compared to other G7 nations, and thinks there's scope for them to fall. However, the Institute of Chartered Accountants warned that hitting employers with more tax rises could crush the jobs market. Well, of course it will. It's already on its knees. With 56% of employers saying they'd cut jobs or freeze hiring if business taxes rise again. I think the other 44% are probably just didn't want to answer the question. Asian economic divergence. South Korea remains in intensive talks with US to iron out final details of its $350 billion investment pledge, including a possible currency swap line aimed at safeguarding against potential financial instability. China, they're expected to keep benchmark lending rates steady for the fifth consecutive month in October. Meanwhile, Malaysia, growth is unexpectedly accelerated in Q3 with the economy firing across all sectors and exports defying Trump's higher tariffs. Geopolitical news. Trump plans Putin meeting on Ukraine. US President Trump said Thursday he plans to meet with President Putin for talks on ending the war with Ukraine, while signaling the US was putting off any decision on sending Tomahawks to Kyiv, as in sending the missiles for them to use, not aiming them at Kyiv themselves. Just to clarify that bit, I think it's quite an important clarification to make. Saudi Arabia. They're discussing a defense deal with the Trump administration similar to US-Qatar pact that pledged to regard any attack on the Gulf state as a threat on American peace and security. So that'd be quite a major move for them, especially as we did see, I believe it was yesterday, the Houthis said that they're going to start targeting Saudi Arabia facilities. So one to keep an eye on there. China, US cyber tensions escalate. A breach of US-based cybersecurity company F5, refresh that, has been blamed on state-backed hackers from China. Chinese sanctions imposed this week on US affiliate shipbuilders Hanwha Ocean aim to undermine South Korea cooperation and coerce Washington's Asian ally. That's according to the US State Department. And finally, for me, obviously, Michael's already on equity names. Michael's already covered Micron. So what else we got? Pharma giants hit on Trump Ozempic comments. Eli Lilly and Novo Nordisk shares fell in late trading after President Trump said the price of blockbuster diabetes drug Ozempic could come down to just $150 a month. Starbucks seeks China partner. Starbucks is assessing bids from 5 parties for its China business as it seeks to partner with partners to navigate the country's competitive coffee landscape. Sticking with China, BYD will make its largest recall yet of more than 115,000 Tang Series and Yan Pro vehicles produced between 2015 and 2022 due to design defects and battery-related safety risks. And what else we got from me? That's it from me, I reckon. Anything worth talking about? Oh, Volvo expects a trucking slowdown to extend into next year as uncertainty links to Trump tariffs weigh on North American demand. Keep on trucking. That's it from me. Back to you in the studio.
I did wonder where that was coming from.
Yeah, it's a Friday. Got to end on a high. Beep, beep.
Well, I'll tell you what, I'll end on an even higher note before I get on to today's docket, which there's not much on it. Pony AI. They got upgraded at Jefferies yesterday.
Of course they fucking did.
It's going to be a, quote, long-term winner.
Of course they fucking are.
Good for them.
Oh, fucking bastards.
I'm still desperate for that affiliate deal.
Yeah, same with me. Come on. If you're listening, hurry up.
Deary me. Anyway, in terms of today, the data docket is pretty light. At 10 o'clock this morning, we have the latest inflation figures out of the Eurozone. This is final data, though, for September, and neither the headline nor the core metric is expected to be unrevised from the flash estimates that we've already received. Thereby, headline CPI is seen at 2.2% on an annual basis. Core CPI is seen at 2.3% on an annual basis. Of course, we were meant to be getting a whole host of US data releases today, but we will not be getting the housing starts, building permits, import-export prices or industrial production figures due to the ongoing government shutdown, which means that the economic docket is pretty barren in the US session this afternoon. We do have some central bank speakers, though. We're due to hear from the Fed's Musalem, the ECB's Wren and Nagel, as well as the BOE's Megan Green and Chief Economist Hugh Hill. The other thing to bear in mind is that close of play today, the Fed will begin their pre-meeting blackout period. And of course, that lasts until the policy decision itself on the 29th of October, not next Wednesday, but the week after. Earnings today come before the market open from American Express. They would be the only one I would usually highlight, but with absolutely perfect timing, we are due to get some regional banks reporting
Yes.
open today as well, including the likes of Fifth Third Bank, Regions, and Huntington. Fuck knows who they are, to be honest
Made
with
up
you.
banks,
But,
made up banks.
the market is going to, you would imagine, be much more sensitive to those regional bank earnings that usually you
Well,
would care about.
especially as there's no data to worry about.
Yeah, exactly. And given how, jittery certain circles of the market have become, that is something worth paying close attention to. And of course, participants will also pay close attention to incoming trade and tariff headlines as we move through the day, if any news on that front were to emerge. And on that note, do just beware the potential for things to get a bit spicy into the close after what we saw last week. You've got to question whether participants are willing to run risk over the weekend.
Exactly.
And of course, the potential for gapping risk over the weekend as well, whether it be on trade, whether it be anything commodity related in terms of those margins we were just discussing, or even something else entirely. There is the potential for some chunky moves at the open on Sunday night. But for this morning and for this week, that is all from me.
Wonderful. Mr. Michael Brown, thank you so much. As always, my dear friend. I am around for a beer later if you want to be paid for this week.
Go on then.
But listeners, whatever you're doing, do stay safe. Keep it tight, rather, if you are trading. Look after yourselves. Do yourselves a favor. Call your dad, call your mum, call your nan, call a family member that you haven't spoken to in a while. Put a smile on their face. Have a great weekend. And myself and Mr. B will see you all on Monday. Much love.
We will